How's it going, fellow traders? It's Magic Trader here, and this is the CFTC data that was recorded on November 10th, 2020. Here is a brief snapshot of the positions held by the largest institutions in the world. And so let's begin by taking a look at gold and seeing what the banks have been doing with their positions. So let's take a look here. What do we see? So as price was rallying up here on the weekly chart, we can see that the institutions used that rally to close long positions. Now remember, all throughout this whole period here, we've been watching for signs of them to take profits. Okay, this is since June. And if we take a look here, we've seen them increase them all the way up to 340,000. That was up back in October 20th. And now for the last couple weeks, they've been reducing. Actually, last 3 weeks, they've been reducing their positions from 340 down to 326, then down to 321, now down to 318. Okay. And as you can see, when they were dropping those longs, they were also dropping their shorts. So shorts are at 78 right now. Shorts are below average, and long positions are about average. So not much going on in terms of that. Profit taking, and then they add a little bit, and then profit taking. So nothing very clear in terms of what we're seeing with gold. So we're going to have to look at the other markets to see if there's a better indication of what they're doing. Now we have oil. What do we see? This past week, they dropped their long positions from 639 to 633. Previous to that, they had a larger long position, 659, and previous to that, they had 664,000. Okay, this data came as price was consolidating here, so closing of long positions, and then we can also see that they closed off their short positions. So again, we're not seeing any strong signs of what they're doing with oil. Market dynamics does suggest that over time we're going to see a push higher in price. Now we go over to the US dollar. US dollar price was dropping on the weekly chart, and what do we see? They increased short positions. So that makes sense. Price is moving lower, and they're increasing their shorts. At the same time, they were increasing their longs by just a little bit. Okay, overall that increases their short exposure from 49 to 51%. Next we have the Aussie US dollar, and we can see that the price was rallying up from demand that we had located on the chart, and as that rally was taking place, they closed long positions from 56,000 down to 49,000. At the same time, they increased their shorts from 57,000 to 58,000. So what's going on here? We can see that we're getting a little bit more bearishness here. Okay, remember, we were extremely bearish back here, less so over here, then they became bullish, and now they're starting to become a little bit bearish again. Now we do have lots of evidence to suggest that over time price is going to drop, and but price right now is stuck in a range, and until one of these areas are removed, we don't know for sure what direction price will be taking. But over the longer period, we do see a bigger drop that is about to take place. Shorter period, likely we see a move up. All right, now we have the USCAD. And so price was dropping and reacting from supply, which we had mapped out. As price was dropping, they increased their longs from 42,000 to 47,000. At the same time, they were also increasing their shorts. Now, based on the ratio of how much was being increased, we have a slight increase here in short exposure from 34 to 35%. All right. At this time, 47,000 for long positions, that is above their average size. Also, 25,000 is also above their average size. Okay, 73,000 total, that is above their average size. So what are we seeing here? Well, price has been reacting from supply. It moved lower, but over time we are expecting a move higher. All right, so US Swiss franc, what do we see here? Price still sitting down here at these lows, which we were expecting. Okay, price dropped, now consolidating. We are expecting a move higher. So what do we see with the institution's positions? They're still very cooled off with longs, and they're still somewhat aggressive with shorts. All right. So bottom line, we do over the longer time see that there's going to be a move lower. Shorter time frame, we do see that there's going to be a move higher. Euro, this one's an interesting one, okay? Because we contacted some demand here that we have from the institutions, and we can see that over the last few weeks, look what they've been doing with long positions. Closing them off 229, 217, 208, now 202. Now this is exactly what we've been talking about. If you've been following our reports, our video analysis for the last many weeks, you know, we told you back here when institutions had 266,000 positions long that they were going to be focused on taking profits on these long positions. And that's exactly what we see. Okay, look at the positions from 266 working its way down now to 202,000. Okay, now at the same time, if we take a look at what we see here, short positions were down at 51, 52. Now look where it's at. Okay, the 67s. This is very strong evidence to suggest that over time we're going to see a drop in price like that. Okay, so we're still waiting for that to play out, but all the evidence is suggesting that we're going to be seeing a drop in price. Okay, now we have the pound. This one is neutral on long positions, somewhat aggressive on shorts. A big increase from 38 to 45,000 would suggest that over time price is going to drop, but it's very early to tell that because it's just one position in that slight aggressiveness state. Okay, if we look here, we see that back in mid-July and June we had short positions aggressive. This is why we were seeing this big drop in price. Then they became bullish with this move up here, and now we're starting to see some bearishness. Now, it's very hard to know what is going to take place with these charts because we're not seeing any very strong structures created by the institutions. But if we were to allow the other pairs to tell us what is likely going to happen in this pair, we're likely going to see a slight drop before a bigger push up. So we're waiting to see confirmation of that. US dollar, Japanese yen, look at that. They dropped longs from 22 to 13,000. Okay, and look at that. They increase shorts. Not only did they increase shorts, but look at that. Back here was 46, now 51, now 55. Look at this. Okay, net positions minus 41,000, and it's aggressive. Look at the coloration here, turning very strong red. 80%. That's very aggressive. We are expecting a move lower. Many obstacles in the way, which is holding price back. But over time, we do expect to see price drop. And Kiwi, we got an increase in longs from 21 to 25. Also an increase in shorts from 14 to 17. Bottom line is short exposure rallies up 1 point. But bottom line, we have sentiment being very neutral. Okay? But you look at net positions, we can see that they're overall bullish. And this is why the push higher. Okay, over time we do see price dropping, but in the short term very strong because we have institutional demand in play, and that is what's causing price to rally up like that. All right, ladies and gents, so that is your CFTC report for the data that was recorded on November 10th, 2020. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks, and have yourself a great week. Take care.